Good morning, everybody. It's been a while since I've been on the air here talking about crypto. My name is Tom, otherwise known as Striking here in this digital media world. And as usual, I forget to turn my in-ear feed on. and blow the intro by having a bad echo in my ear. But I got it fixed. And once again, my name is Tom, otherwise known as Striking here in the digital media world. I'm going to be on all week here in the morning. I'm a little late this morning because I had setup issues getting ready. But my goal is to be on every morning at 8 Central, 9 Eastern. Go for an hour and lead into the Crypto Lifer show and let him run with it with his daily technical analysis of everything. But before you get to the technical analysis about things, you got to be a little bit entertained to get a little bit of news about crypto. And I'm going to provide that. Maybe, if anyone watches. Anyway, there are a couple of you on here this morning. Thank you for joining us. We are live on YouTube and on Kick.com. And also, we're live in my Telegram room, which is Striking's Crypto Smackdown. So search for that and join that if you would like to join me for a talk on the air this morning. This morning, we're going to cover a couple of things. One is the craziness in the week of crypto that's been going on. I shouldn't say the week. I kind of use that phrase all the time and talk about it a lot because crypto is crazy. But in the past week, we've seen crypto, as you can see in this chart over here, up here. That's a Bitcoin chart. Wow, that perspective makes my finger look weird. That's the Bitcoin chart. We're trading at 27,500 or something. Right now, let me see if I can bring that up. If you guys want to know what it's 28. Actually, it's 20. Got the chart real small. Can't read it. Anyway, it's a lot, and it's up a lot. It's up 45% over the past 2 months, which is a good thing for Bitcoin. We'll talk more about that later. BNB's pumping, even with the troubles that Binance is having in the public relations area, and we're going to talk about banks failing. And the craziness that's going on with the U.S. government and that, too. I won't have a lot for you graphics-wise and my usual wizardry and all that because, well, it's day one of this. Anyway, welcome to the show. And like I said, if you want to join me in the Telegram Crypto Smackdown room. Other than that, let's get to it. One of my new favorite songs, next to the rugged, ruined, and wrecked intro, is that the, I don't know, well, we won't call it AI, but we'll call the music beat matching software that is used to get your, the ins and outs of your video entry right in time to music. It works pretty well. And I don't use that modern space music, even though I've got the Space Lounge here. Oh, yeah, that's what I got to put. We got upcoming events in the Space Lounge for the first. But it gets me charged when I hear those ditties that I put together with the intros for these shows. And I know the intros are not in style because people are so feeble in their watching. Wait, why is this not live? There that is. Sorry about that. Just making sure everything's working right. People are so feeble, so pathetic, that if you don't have them fully entertained within 1 second of them clicking on your stream, they're gone. And you can see that in the analytics. And so generally having a long intro of about 40 seconds or so is not good. Not good. But for these live shows, people can stand it. But you get terrible replays. People don't make it through the intro, even though I put so much time into it. Anyway, I like it, and we'll adapt as needed. Good morning, Chuck. Welcome for tuning in. Welcome. I'm glad to be this big in the living room TV for the DYOR live show. I guess I'm calling this the DYOR live. I added the word crypto into a DYOR crypto live with striking, trying to make it better on the YouTube algorithm, which is yet to be cracked. There's plenty of guys out there, all the O-face guys. There's plenty of, like a 23-year-old kid will start up his YouTube channel, have no viewers, and then get up there and be like, dude, bro, NFTs, bro, dude. And he gets 20,000 views, and I don't get it. Anyway, the point is we'll be bringing you good content and not doing the bro thing. Anyway, the point of these morning shows is to kind of sit here and be casual and go over the kind of the morning news. Everybody wants to hear something interesting as they go about their business in the morning. Kind of like a talk radio thing. And my plan is to do that all week and try to get on a regular routine of doing that. If not every day. I'm going to do it every day this week just because I can. But I'll be busy the next couple of months. I'm getting married in April in Florida, and so that's going to take up a lot of my time. And with Rugged, Ruined, and Wrecked sponsor Audit Chain, I've got a lot going on with them as they prepare to launch their new product out, which we can talk about at length later in the bank's failing stage. Oh. But first, let's talk a little bit about Bitcoin here. As you can see on the TV down here, I've got the Crypto Lifer on. Lifer, if any of your guys are watching it, thank you for not objecting to me just having your picture here. I'm going to be leading into your show later. But he's been very bullish on Bitcoin all the time. And it came about that just as people were kind of trying to talk about and kind of force the issue of a bull market onto this bear market, they're looking for every little sign, every stinking little sign from the Fed, from any government at all, that they were going to, the economy was going to get better, to interest rates lowering, inflation's coming down, even to the point where we hope that the economy doesn't hire too many people, because when that happens, inflation goes up or adds to the pressure on inflation. I mean, just every little thing people were hoping on, and it was a big up and down in BTC pricing. And then the banks failed. It drove people. Forever, people have been saying Bitcoin and crypto is a good thing, and the naysayers have been like, it's not a hedge against inflation, it's awful, it doesn't do anything. But what it turned out to be was a flight to quality. And the other terms that are a flight to quality that people use are gold and treasury bonds with the U.S. government, and some other pretty stable commodities. But nobody expected them to say flight to quality for Bitcoin. And so the banking crisis has caused Bitcoin to go nuts. It's actually just trying to bring the chart up here, and it's not working. Let's see if we can get it up here. There we go. There's the Bitcoin chart. We are trading at a nice overnight pump at 28,000 even here. Let me bring the chart out. I am not a technical analysis guy, so for those of you watching that are technical analysis people, head over to Crypto Lifer's channel. You will get expert technical analysis for that. I'm a kind of a fundamental trader by default because I don't have the time. Let me rephrase that. I can't make the time to actually sit down and learn technical analysis properly and day trade. And I've proven over time that because I don't do that, I'm a very bad day trader. It's a little bit more emotion and feeling. And we all know that in day trading is not good at all. But anyway, as you can see from the BTC chart over the past couple of days, we've been as low as 19,000 US dollars since just really March 11th. See if we can pull this back anymore here. And let's get the 1 hour chart. Going all the way back to, well, this is November of last year, as low as 16,000. As many of you know, I spend a lot of my time in Canada, and the Canadian political landscape about crypto is about the same sentiment as the U.S., but in a different way. In Canada, or in the U.S., we all know they're trying to do legislation by regulation, and this Operation Choke Point, or whatever you want to call it, is basically in effect just hammering everyone doing business with crypto companies. And in Canada, it's a little different. The provinces are regulating crypto, but they're giving them a room to operate and trying to set kind of a level playing field and to make sure everyone conforms with the basics of regulation, keeping things safe, general KYC issues, making sure that Canada's not contributing to money laundering and that type of stuff. But it's different because Canada is a parliamentary system in which there's a prime minister, for those of you Americans that don't know, and it's very antagonistic right now. Much like the Republicans and Democrats in the U.S., they're fighting at each other's throats. And the opposition leader is a younger gentleman, and he, when Bitcoin was flying, he was talking about, hey, how great Bitcoin is and all this type of stuff. And then, of course, Bitcoin went from 60-some thousand to 20,000. And the Prime Minister of Canada just beat him up. And all of his minions beat him up, saying, oh, if you told grandmas and grandpas to get into Bitcoin, they would have lost their life savings and lost all their money. First of all, they were lying. I mean, it went down by 60% or 66%. That's not all of your money, but it's a loss. But nobody was telling retired people or people with a very low risk pattern to get into Bitcoin. Anyway, but they are seizing on and beating him up. Now, you should be investing in these stocks and things like that, and automotive stocks and blah, 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 blah. Well, what's happened in the past few months? Or few weeks, I should say. That's right, ladies and gentlemen. Bitcoin's up 45%, and all the other stocks are in the tank. So the political climate is quiet now. It's quiet, very quiet, and people are not beating up the opposition leader anymore. I don't want to go into political talk, but and that's why I'm generally using the terms parties and not the individual people. But the point is that Bitcoin is in somewhat of a resurgence, which is good for all of us in crypto. Let me bring up the 4-hour chart here, try and expand this out a little bit. As you can see here, these are way over here, the highs from Bitcoin. I've got some anti-aliasing to do here. Back in the flying era of from November to January of November 21 to January of 22. And then as it dropped down and everyone pulled their money out, we kind of just traded in this narrow band for a while until getting down here and trading under 18,000. All the math that many of the good callers on the internet were saying it was going to be a $18,000 minimum. That was it. And it was holding right around 18,000 here. Actually, it was holding a little higher than that. and then FTX failed, and then all bets were off and caused it to drop further. But with all those troubles behind us, the crappy companies, FTX and all the and Gemini and all the people that were leveraging themselves and borrowing money just to pump back into Bitcoin, spun out of their positions and tanked the price. But they're out, and those over-leveraged positions or kind of false things. I mean, we can talk about how people pump their own tokens like FTT and for that matter, the old Luna and UST guys also. We can talk about those all day. But really, once those over-leveraged trades are out and it brought the price down, it gave it a good floor. And it allowed actual market makers and larger institutional people to get back into the market with a little feeling of safety. And that is key for confidence in the market because the really large players, I mean, as we all know, most of the Bitcoin trading isn't day traders and people like individuals or small little firms and all that. Most of the Bitcoin trading is the large institutional investors now, market makers, and exchanges hedging their positions for the Bitcoins bought and sold on their own, or I shouldn't say hedging, I should say arbitraging the Bitcoins bought and sold on their own platforms. And so we end up with those large groups starting to get back in the market. And once that happens, it's excellent. Once, you need a lot of money to come into the market in order for it to really grow. And on that note, I want to bring up the fact that there's plenty of people on the internet right now talking about how Bitcoin's now at 30, it's got to go to 60. Then it's going to go to 100. One guy's even calling it's going to go to $1 million. If a whole bunch of banks fail, it's going to go to $1 million per coin, which is patently ridiculous. I mean, the value of all the Bitcoins in the world would be more than the currency that's out there. But the point is that with Bitcoin, I think it's a market cap right now of 400 million. I'd bring that chart up right now, but I'm not bothering with it. Anyway, the total market cap for crypto jumped over $1 million recently. $1 million? $1 trillion again, which is a good thing. Hey, there's Carmen Crypto. Welcome to Carmen Crypto. Sorry to interrupt my spiel about Bitcoin, but Carmen, you were on the intro here. Let's see, make sure I got everything open here. Carmen, you were on the intro here. You get up early in Pacific time, you could be on this show. Tomorrow it starts a lot earlier. Anyway, actually, I do need to do a quick check of things here. All right. So what I was saying is, Carmen, the hardest working woman in crypto, let me tell you. And I think it's disingenuous to even say the hardest working woman. I should say it's more genuous to say the hardest working person in crypto. She's killing it, ladies and gentlemen, killing it. And one day she's going to have this thing called FOMO Fest under her belt. And I'll let her talk about that another day on this show. But right now we're talking about the Bitcoin and its future and really why it won't. I'm going to talk about this topic all week. Why it's not going to go crazy, but why it's not going to tank without any other bad news. If there's no other market bad news or super awful things like the war, it doesn't spread more into Europe, or the U.S. government just totally botches it again with the Fed and bailing out people. That's something I need to write down to talk about. FDIC, SVB. Then we're going to see some appreciation in Bitcoin, and not a lot, but it's going to be a buy pressure on it. Market sentiment is good in Bitcoin right now. People see that it's a flight to quality, and the awful people have been gotten out of it. And I have explained this in my Striking Crypto Smackdown room a couple of times, Telegram room a couple of times. But here is why. We got to 60,000, almost to 70,000 during the great times because FTX and Gemini and Luna and other similar groups were falsely inflating the price by creating their own tokens, which the banks didn't know how to value and other people didn't know how to value, and lent them a ton of money, of actual cash monies, on the value of their own tokens, which was on their balance sheet. So they were looking at their balance sheets for the entire exchanges or their companies and all that. And when they looked at the value, it said, worth with billions of dollars. This is a good thing. Let's see, we're not sure about this, so let's only give them half credit. So or whatever their risk management thing was. And so they loaned them actual cash. And what did those companies do with the actual cash? They bought more Bitcoin and they pumped their own token. So you can see the price of the FTT token go like this. Like that. No, those huge bumps correspond with when they would get two things: a lot of cash from customers, from clients to funnel over to Alameda, or huge loans from investors based on their kind of fake balance sheet type stuff. And so that all that over leverage and kind of fake leverage just pumped the price like crazy. And the hundreds of billions of dollars that was over levered and re-levered, and I don't even know the right term for it, multiple levels of leverage, pushed the price up to 60, 70,000, brought BNB up with it because they were so linked at the time to 600, all pushing 700. People are talking about BNB at 1,000, 2,000, 5,000. And then the top of the market in November of November 21, January 22, right in that area, right in here. God, why didn't I set that up right? It happened, and it stopped. It came to a halt for no other reason that all that extra leverage that was being put into the market stopped, because the companies just kind of ran out of the ability to really get a lot more. And if you think about it, as you know, when Bitcoin was 1 cent each, the price, and like any token, when the price is very low, its market cap can double and double and double and double. It's very easy to do it. When your market cap is, at the time back here, Bitcoin's market cap was 800 billion or close to $1 trillion, maybe. To double in price, you need another $1 trillion of investment. And that's a lot of money. Even though the U.S. government parcels it out like just fuel for the week for aircraft carriers, from maintaining reactors and refueling airplanes in the sky. An extra $1 trillion is a lot of money. Bitcoin is different than a lot of our Ethereum-based tokens. Ethereum-based tokens, or Ethereum chain-based, I forget the actual word for it, are based on liquidity pools and based on a pairing your thing with other things. And so they don't move up and down linearly with the price of the underlying token. They move kind of exponentially or logarithmically, whatever it is. But Bitcoin moves up and down just based on how much money is coming in and out linearly. So in order to double in market cap, it's got to go from $1 trillion market cap to $2 trillion. That's a lot of money. And to go to $5 trillion, it's got to get $5 trillion put in it. That's a lot of money. That's a lot of cash laying around. That's more than all the day traders involved in the world trading things put in the market. Sure, there's companies out there like BlackRock and things like that could raise probably $1 trillion if they wanted, but it's just not feasible. That amount of money is too much. And I'm not explaining it just right, just so people don't get in the comments later. Well, it's not. You could do the math and and it's 2% this and one. The point is that it needs a lot of money. It needs a lot of money to go up a lot, and so. The hot area for Bitcoin isn't that it's going to be a massive growth cycle and like, oh my God, we're going to make 5x, 10x and all that. You're going to keep your money safe for it's a good safe place in crypto. I lost what I was going to say with that. In the flight to safety theater, flight to quality. It's looking like a good thing finally, which is good for all the markets, and it's going to bring up the all the other tokens, and it has, as we've seen the price of BNB come up also. So for today, that's my spiel on Bitcoin. It's pumping. It's up a lot since the bank failures started going. It's brought confidence back into Bitcoin. It's brought because there hasn't been any large dumps of Bitcoin from like single big wallets. People understand that there are no over-levered. Well, there probably is plenty of over-levered, but no massive companies that are about to fail that have a huge Bitcoin over-leverage that would need to liquidate it immediately just to raise money. Like I said, so that gives the market makers a little confidence, and it gives the other exchanges a little confidence to say, hey, okay, we're going to promote this more, lower the fees for trading for people, and get this Bitcoin back and running again. And I got to tell you, it's running. It hasn't gone up this much this quickly since. Looking at the chart here, in a 2 or 3 day, I should say in a week-long period, hasn't gone up this much in one day since February of 22. February, March, April, May, June, July. Yeah, in a year. Haven't had this much price action on Bitcoin, except down price action. Which leads me to the place where people are going to make money from crypto or from Bitcoin is in the futures markets. Everyone has a lot more, I should say everyone, all the exchanges have a lot more packages, futures. You can get into it more easily. You can better get into futures trading, and with more people in futures trading, it makes the markets a lot better because you get the futures markets end up being more liquid, and you get better settlements. I spent a lot of time in the futures markets as a kid. I've had a lot of jobs as a kid. Working on the commodities exchange in New York City in the old World Trade Center. And there was a lot traded there. But anyway, the more liquid the markets, the busier they are, with the more volume going through them, the better pricing people got. And when you're trading these things, and when you hit that button in the futures markets to buy or sell, you want a price of what you hit. But when the markets are not liquid, you say, I'm going to buy it at $100.01, and you click it, and then you get the fill back, and you bought it at $101, and you're like, well, that sucks. That price isn't even close. You make an inquiry, and they're like, look at the trades. That was the next trade, because the market wasn't liquid enough. You lost a dollar in the price. But when the market's cranking and there's a lot of people in it, and they're filling prices all the time, then you get better pricing, better settlements, and you have a better opportunity to make money because your buy and sells fall within your trading pattern, which is good for the day trader, and it's good for the program trader. It's good for the people that operate their own artificial intelligence, which is, people use the word AI in crypto trading all the time, and it's really kind of fake. It's their own coding and their own rules. So it's not artificial at all. It's human intelligence. It's better for those things, and it keeps the markets liquid, and it allows people to make good money and not really get wrecked, as I say, by having a bad trade. When if you're a trader trying to make $100 here and $100 there and $100 here and $100 there, getting a good fill in the futures markets is good. So like Lifer over here, talking about Bitcoin and just investing it for the long term, that's a good thing. But I think where people are going to make their cash monies is going to be in futures and other derivatives of that. All right, with that, let's talk about BNB. Let's see here. Where is it? My search function. As you may suspect, I had all these charts up ahead of time, and I closed my browser to clear out its memory and reopened it and didn't hit the restore pages. I just love that. Oh, and of course I'm not logged in either. All right, hold on. Yep. Oh, we'll use the old standard PooCoin. All right, BNB's trading at 337. Let's go back to, that's the 15-minute chart. Let's get the 4-hour chart here. As you can see, the Bitcoin chart here is pretty much following the BNB chart is following the Bitcoin chart. Going all the way back to, here we go, last year, 22. Hold on, let me move myself over here so I can talk about this better. Ooh. I just realized I've got an empty TV here. Could have put Audit Chain up there. All right, I am going to do that. Let's see. Bottom. TV right bottom. That should do it. There's the Audit Chain logo over my shoulder here. We'll talk more about Audit Chain in a minute. But right now we're talking about BNB. As you can see, this is the chart for BNB, similar to the one I just had up for Bitcoin. You can see the same pattern. It's going all the way back to, it looks like May. Let's bring it back a little bit more. Let's get the, that's the 4 hour. Let's get a 12-hour chart. Oh. But anyways, you can see the Bitcoin pricing going all the way back to, I'm sorry, BNB pricing. I guess this is only back, this chart only goes back to, oh, it's PooCoin. Let's see, it's April of 21. The April of 21 pump there was the, as we call the Safe Moon pump. And that's when BNB started at like $20-some. And then the Safe Moon craze came, and then it just went nuts. Causing everyone that was in early in Safe Moon to make a ton of money. And then it backed off to be more in line and trade with Bitcoin, and that's where you see it get the same highs as Bitcoin did at the end of 2021. As we all know, BNB went nuts here. That's when our own DYOR project went nuts. And we all miss those days. Yes, we do. Then it came down, and it basically followed, mostly has been following Bitcoin with some divergence, because as crypto, I should say, as Binance got more wealthy and more money, they were able to invest in BNB and also move some markets in that. That allowed it to have a little divergence from Bitcoin, but really it kind of traded in the same way. And as you can see now in the past, we'll move back to the 1 hour chart. In the past few months, we've reached a high for 2023, which is good. This is I know you can't see the numbers that well here, but this is the end of January here. And looks like we're going to be moving up against that. It seems that BNB has a little resistance there, and that's on the 12-hour. I don't want to get into technical analysis because I'm not good at it, and I'll make a mistake. Let's see. Bitcoin back going here. All right, Bitcoin is showing it a little differently, so the resistance is in BNB there. Anyway, I digress. The good news for BNB is that I'm on this program and on this channel doing all this not just because I enjoy it. It's because I do want to bring attention to the project I started at, which is the DYOR token, and that is a BNB-based token. So when the price of BNB goes up, DYOR pumps because it is paired with the BNB native token. So we wanted to pump a lot. Yes, we do. Yes, we do. We haven't seen good pumps in a while. And every time we did in the DYOR token, we saw good pumps. Some jumbalone sold it off and wrecked it for us. Brett. Anyway, we'll get back there. Like I said, we're just hanging in there. But we're not talking about DYOR as a topic today. We're hitting the major topics as we go through the day here and lead everybody into goodness. The last major topic that I'm talking about today is the bank failures. And I wouldn't be able to properly plug the bank failures without properly plugging Audit Chain. Audit Chain is a sponsor for my Rugged, Ruined, and Wrecked show. And as I always say, and I thank them for that. But Audit Chain is a actual project / company based in Switzerland that has a product that the best way to describe it for new people, and I'm going to use the wrong term, so Jason, don't get angry. It can audit traditional companies. And it doesn't mean going into their books like auditors do and grilling the executives about things. It can look at their financial reports and the information that comes out of the company publicly. And it can parse through all that information in seconds and see what they're missing, see what they're failing, and compare things. I shouldn't say compare things. I should say if things are their calculations are correct. B, if they filed all their disclosures, and if they're reporting correctly. And then it makes it easy for them to also put in there, say, hey, if this type of ratio is too much, flag it. If this, then all sorts of things can come about. And it picked up. The Audit Chain is getting ready to launch. They're bringing out their validating nodes now, and it picked up the fact in arrears because of testing the fact that Silvergate and SVP in Silicon Valley were basically horribly. I shouldn't say horribly run, because I can't judge that. Their filings were horribly in disarray. And in one of my shows, I talk about computer systems, and many of you in IT know this old adage: garbage in means garbage out. And so if people are putting in crappy info or have bad methods of putting information in the system, then you get bad results. It's just what it is. Computer systems are a lot better than they used to be. You can put all kinds of logic in them, but still, if you give them bad data or do bad things, you get bad stuff out. And so the Silvergate and Silicon Valley reports were terrible, and I should have them up here to talk about Audit Chain, but we're not going to do that right now because they'll take forever to get them back up. Actually, I think I might have one handy here. Let's see, where did I put them? Crypto shortcuts, Pacioli, calculations. Let's see, which one is this? Still running. Put this over here. There we go. All right, this one is, I believe it is Silvergate. No, this is Silicon Valley's, one of Silicon Valley's reports. And what Audit Chain does is it goes through and says, all this shit is bad. Pardon my French there. It's not any good. And it has all these errors. And where it's green, it's a good. And where it's red, it's not good. And I can't go into the technicals of that because I don't completely understand it. I'm not a financial reporting professional like the people at Audit Chain are. But I can tell you we're having an AMA Thursday at 11 a.m. Eastern Time, in which the team from Audit Chain, I'll be hosting an AMA for them. The team from Audit Chain is going to go through these reports and tell you how to read them so you can get information more quickly than everybody else in the market. Yeah, imagine like as soon as a major bank files its report, within seconds, you can have the info of whether they're either basically lying, covering things up, or have held to maturity bonds, which is a whole topic now that I've learned all about, in a ratio that is way outside of what is comfortable for investors and people. And I know I've probably gone on too long about my sponsor here, but it's really the first real utility other than lending on assets in crypto that has a real world, not in crypto side to it. And when I tell people about it and I say, yeah, a crypto project can now check up on traditional finance companies, it literally blows people's minds, because there's all kinds of we've seen people talk and testify in front of Congress saying there is no use for crypto, zero, it's done, it's all a Ponzi scheme, it's fake. And then those of us in the business are like, wait a minute, we see products every day. There's a lot of them that are crap, that are just yield farms, or the way to, he said, oh, you can make some money in crypto, and they're all just generally the more people that put their money in pay the exit liquidity of those people leaving. And but Audit Chain is really a utility that kind of allows you to check up on basically any traditional finance company in their filing, or any company that files with the SEC or the similar jurisdictions and regulators in Europe and Canada and Australia, 60 major jurisdictions of the world. You can check up on these companies instantly. And they're getting ready to launch. We're going to have an AMA Thursday at 11 a.m. Thursday, the 23rd. Thursday, the 23rd at 11 a.m. Eastern Time, which currently is -4 UTC, I think, or -5. I don't know. We're in this weird window of European time. I guess it would be -5 UTC. Whatever. It's 11 a.m. Eastern Time. If you're in a different time zone, you figure it out, because you've got this under control. Anyway, so that's it for Audit Chain for right now. We're going to have another plug for our Space Lounge. Carmen, if you're still listening, let's find the guys at MemeKong. We are going to have an AMA again. We haven't been doing a lot in the Space Lounge. And so we're going to have an AMA Tuesday at 12 Central Time. So Tuesday, it's tomorrow at 1 p.m. Eastern Time. And the guys from MemeKong are going to be on. They have been on the Space Lounge a couple of times, and we're going to help them get the new information out about their project, which is actually, it's out nicely at a $4.5 million market cap right now in this crap token market, as we say. But the MemeKong guys are going to be on. Chris and Eric, all the new information that's going on, all the new things they're doing, the new projects. They're going to talk about all the real world stuff they're doing to market their token, and how their token and the whole MemeKong ecosphere can help you make a whole bunch of money. So they will be on the Space Lounge. And as they say, no, I don't own any MemeKong right now, nor have they given me any or anything like that. So that'll be fun to talk to those guys again. It'll be good. It's just gonna be Carmen and I. Robert has other things going on right now, so he won't be with us. But in the Space Lounge, it'll be Carmen, Crypto, and I doing the MemeKong AMA. What else do we got? This is, I know you probably can't see it, but this is the decrypt.co website. Always good news on Decrypt. Guess they're talking about Arbitrum and their airdrop and how much money everyone's going to make. I got to tell you, Arbitrum is taking the focus away from Hex and Pulse and their big thing that they had going on for a long time. If you've listened to this show, you've heard me talk about Pulse Chain and the sacrifice and all that going on with it. It's going to end up being the largest cheat in the history of crypto. And I think Arbitrum's going to beat them to the record of being the largest cheat, as people get airdropped free tokens or worthless tokens, and then as the liquidity gets added to the project, the value that's going to go up. As soon as there's any value in there at all, people are going to cheat that MF right down. Anyway, let's see what the good news where later in the week I'll get more casual into the news of the day and all that, and just giving you the news in the background. Today I wanted to hit the bigger topics of what's been going on with Bitcoin, because these shows, as they tie, like, you can't leave these shows up on YouTube for a long time because the information gets stale very quickly. So they're just going to be up there for 5 days and automatically time out. Give people a couple of things to listen to in the morning. So I wanted to hit Bitcoin, BNB, and talk about what's coming up in the week early. But the last topic I want to talk about today, after about a good half hour being on the air here, actually longer than that, is are the banks failing? And the interesting thing that the government has done, U.S. government has done in saving Silicon Valley Bank and Signature Bank. This is normally where I would run a commercial and say, all right, everybody, I'll be back in a minute. I don't have any lined up. I'm not drinking coffee. I'm drinking tea. Drink too much of that, and you need to take a break. But anyway, we all know about the issue about Silvergate and Signature Bank, and for that matter, Silicon Valley Bank too. Silvergate actually failed, and they went into liquidation. And Silvergate is going to be no more. Silicon Valley and Signature had very lucky thing happened. The U.S. federal government got together, Janet Yellen, the president, and a couple other muckety mucks in Washington, and said this failure of this bank is going to cause too many problems. And so even though the FDIC only guarantees $250,000 per account, and there's lots of little rules, so don't argue with me in the comments about what they cover or not. The FDIC said this is an exceptional circumstance, and on the authority of the president and the head of and Janet Yellen, they covered all the deposits, and they will get the money back from that by charging the FDIC banks higher rates later. But that's not the point. The point is that they guaranteed all the money in the banks, and everyone would think, wow, this is a great idea. That's so awesome. Not anyone lost any money and all that type of stuff. There's a problem with that. There's a big problem with that. And the problem with that is that the banks and the customers the banks don't pay for their sins, and the customers don't get hurt. Now, customers getting hurt is a bad thing. I get that. But when customers get hurt, it sets everyone else's risk for everyone else in the market to go, we need to question that. And it brings up the market in general and makes all the other banks better, because all the other investors say, we don't want that to happen to us. And the board of directors get involved. And for banks, this would be fixed by raising their ratios of cash, lowering their exposure, using more hedging, and making sure that they don't have exposure. What Silicon Valley Bank did is that they ended up, it's a long discussion that's for another day or another show, but they ended up eliminating a lot of their products that were properly hedged in order to raise liquidity to fund their bank, and to really take what they did is every time, for a couple of quarters before they failed, every time they got to the end of the quarter and had to report earnings, they would be losing money. And so they would sell some things to raise cash, and they weren't just take one liability or one asset off and move the cash in. There was ratios and leverage and stuff like that. So they would show, when they would sell it, they would show the gain on the investment, and they'd show a profit. And showing the profit meant that the stock price stayed up and the earnings per share stayed up, and the executives got paid on that, and that their bonuses are based on stock performance, and they got paid. So they would do things like sell products. I'm going into this too long, but what Silicon Valley Bank did is they ended up without a lot of their long-term investments, without them being properly hedged. So when inflation rates went up, they didn't have an inflation hedge to that. I should say interest rates went up. They didn't have an interest rate hedge on their products. So they got hammered. and the government had to step in. Now, the government stepped in and covered everybody as whole, and I'm talking about this at length because of this reason. They told two of the largest banks in the market, we're going to cover you and make sure all is good. Where the hell is my... Strange. Sorry, I just lost my my streaming thing here. There it is. Cryptoholic, welcome. I don't know how long your message has been there. I've been rambling on, but welcome. I'm talking about the bank failures. And the important thing that kind of came out this week with the FDIC covering everybody's deposits, and like I was saying, it was good, made the bank whole, or the depositors whole. They didn't lose their money. That's good. Companies that had their payroll there could make payroll. But however, what this does is it's reinforcing the fact that you can make bad business decisions and not pay for it. Well, all the executives got fired, but you can take larger risks, and you're not supposed to do that in crypto, right? No, we all take risks in crypto. You're not supposed to do that in regular banking. You're supposed to be very safe and secure. And so it happened by guaranteeing the largest bank failures that everyone's gonna have their money. They told the market in general that they told them this important thing, and it came up in a Senate hearing with Janet Yellen just, I think Friday, that the largest banks are not allowed to fail, but your small regional banks are not as important. Like Silvergate was a big bank, but it was a smaller bank. And so if the FDIC says these banks are too large to fail, we're going to support them, what does that do to the other banks? Right. It's like walking through the playground and saying, these are all the cool kids and those are not the cool kids. And all the cool kids get to go on the field trip, and the not cool kids, you have to stay home. What does everybody try to do? They want to go hang out with the cool kids. So what's happening right now is money is moving from the regional banks in the U.S. to the larger banks. Even money is going into Silicon Valley Bank, if you can believe it, because now with the government putting new management in and under the FDIC's or the Fed's control, the bank is 100% safe. The whole market could crash tomorrow and everyone could lose their money. But ironically, in the bank that failed, everyone's money would be safe. So money is literally moving out of regional banks into the larger banks because of this too big to fail idea. In the hearing the other day, which of course was one of the things I had set up here too, is one of the senators from Oklahoma that's on the Senate Banking Committee brought this up. Said, hey, money is leaving our three major Oklahoma banks, Bach, the Bank of Oklahoma, I can't remember the other two banks, and going to the larger banks. And that's a problem because as the money leaves these smaller regional banks, it changes their ratios of how much equity they have in the bank, and it makes them more susceptible to bank runs. And as we saw with Silicon Valley, once Twitter starts saying, hey, this bank isn't any good, people start going, you know what, it's just Twitter. I'm not going to do anything about it. It's just Twitter. You know what, it's just Twitter. And then they're sitting there and they're like, I better make a move. And then they call up their banking guy and say, hey, take 50% of my money and move it over to Citibank or something like that. And for you and me, 50% is no big deal. But for a giant oil company or a giant investment fund based in Oklahoma or something like that, that's an oil and gas investment fund, say, hey, I need you to move $5 billion move $5 of our $10 billion out to larger banks just to make sure things are safe. And all of a sudden, the regional banks are very, very weak. We all know what happens then. That's when the government comes and says, oh, all these other banks are failing now. We're out of money. We can't turn the money printer on that fast without wrecking everything. And then, as they say, once again, the big guys win and the little guys lose. And if you listen to my Audit Chain podcasts, I'm the host of the On the Brink podcast for Audit Chain also. The venerable Jason Myers uses the term that the big banks are going to get it all in the end. And that's seemingly what is going on right now. Well, it's been a good morning crypto show for everybody here. I'm gonna look over my my notes here real quick to see what we've missed and what we got going on. But there's just too much news, as we can. Let's hit back to Bitcoin here. Oh, it's meeting a little resistance there today. Crypto lifer still going at it. Earlier I was talking about the Carmen Crypto being the hardest working person in crypto. I think she's the hardest working business development person. I'm going to have to give Crypto Lifer the hardest working guy in crypto, hardest working person in crypto. He goes live not once, sometimes 2 times a day, and talks the whole time, a lot longer than me, with way more informative stuff and detail about things. It's, like I said, about technical analysis and general sentiment about the market. He's not always right, but I had him on my show a while ago, and I remember him walking me through some technical analysis stuff. And when you see what he talks about playing out in real time, and you're like, that shit works? And you're like, oh my God, why don't I do this? Well, because it takes a certain type of personality to sit in front of your computer all day and go through a bazillion data points and come up with it. So that's why Crypto does this on a show, and you watch, and then he does the work for you. He even has paid groups. I'm not paid by him or sponsoring him. I've just had him on my show. I'm going to have him back on my show, and hopefully I'll be on his again at some point. Wait, have I been on this? No, I have not been on his show. Hopefully I will be on his show to talk about these types of things. Let's see. Let's look around what we got left here. I really could go on all day. I mean, I really could. When a while ago, for those of you that haven't been around a long time, the history of this channel is based on when the DYOR token originally launched in April of 21. And they said they needed some YouTube support and videos. I'm like, hey, I kind of do this for a living, so I volunteered for that. And then I said to myself, all right, well, I can have a regular show. Actually, it didn't turn into a regular show. It turned into a marathon talking about when the DYOR token was listed on CoinGecko and then on CoinMarketCap. And that's back in the days when those meant something, because people watch those charts and they're like, oh my God, it's new. It's new. We got to do it. We got to do it. Oh my God. And so we were on the air all the time, everyone from the project, and I would do these long overnight stints and be on for 8 hours or 12 hours at a time. And you might have a few bourbons during that time too. And you got really tired. But because people anticipated it coming on, I started doing a show around it. And I've been on and off about it the past past year or so, trying to get back into it. Using this week to really try and lay the morning thing. I've tried different times. I've tried late at night. The midnight show is pretty good. It gets the people in Europe going to work in the morning. It gets people in Asia, which is good, and I like that. I talk to my friends in Australia and Hong Kong and so forth, but it misses out on the majority of people from the U.S., except the people late night in bed on their phones before they go to sleep. So I'm trying to get a better little crowd on this. Just a nicer audience, seeing if we can rebuild this up and have some good content for you. For those of you that stuck around this morning, I thank you. For those of you that came into my Telegram group, I don't thank you because no one did. I should have put this in the DYOR project, but I'm trying to keep it a little separate from the token itself. I want to be able to provide, well, first of all, stay out of the various regulators' eyes, because first of all, I'm not an influencer of any means. To influence people, you have to have an audience, and I do not have a large audience. All I have is a good cup of tea and a nice microphone. But anyway, that is what I wanted to talk about today. We hit BTC, what's going on, BNB, it's a little bit of history in it, the banks failing, and the problem with the government guaranteeing the large banks right now is that they're not guaranteeing the small ones, and so capital is moving from one place to the other, and capital can move a lot faster than it used to. And when the Fed introduces its new e-transfer method called the Fed Now, it's going to basically put wire transfers out of business, and you'll be able to move money instantly around, kind of like crypto. And so the regional banks are going to suffer like crazy unless they can be made whole also, or at least told that they are the cool kids too. Ladies and gentlemen, my name is Tom, otherwise known as Striking. Thank you for your morning crypto here. Thank you for those that tuned in on YouTube. And thank you to those that tuned in on Kick. Kick is a weird platform with a lot of craziness going on to it, but a lot of crypto streamers. I want to thank the Joker for getting me to start streaming over there. We'll see if that can turn into some subscriptions. Twitch takes half of your subscriptions. Kick, it takes only 5%. So that's the difference with that. So ladies and gentlemen, thank you very much. I enjoyed it. I enjoyed talking with you this morning. And hopefully during this week, we'll get a couple of you on here to join me. Carmen Crypto, I will see you tomorrow, Tuesday, for the Space Lounge AMA with Meme Kong. And ladies and gentlemen, as always, thank you to Audit Chain. Have a good day, everyone.